Welcome to Money Talks. I'm Genevieve Westcott with the latest financial news from the rural heartland here at home and around the world. In this edition, Fonterra powers ahead with its dairy farm developments in China, scoring almost 50% compound annual revenue growth in the giant Asian economy over the past 5 years. Is it just about skyrocketing demands for dairy in China? Meantime, Fonterra's departing CEO, Andrew Ferrier, warns milk price regulation here at home would be collective suicide. Are we headed the way of the USA and Europe? And will the overextended global markets correct? Or are we witnessing a move towards new trading ranges in world currencies and commodities? The New Zealand dollar hits 80 cents against the US dollar, with the focus on New Zealand's high commodity prices. Where to from here? All this and much, much more coming up. Let's start by talking about that Kiwi dollar at 80 cents. Will we see it again? Joining me now is ASB rural economist James Shortle. And James, great to see you.
Good to be here.
Now, what about that crazy dollar?
Yeah, well, it's interesting because a few people have been asking me, what is happening with the dollar? Are you banging on the 80-cent drum? And to be honest, I haven't been banging on that drum, but yet
maybe you're going to have to.
I think so. And we've still managed to crack through. We've traded basically at 80.00, so hit that threshold, and there was probably every reason why we could have gone a little bit higher, given what the sentiment in the international market was. But since Monday morning, when it sort of hit those highs, and we've drifted a little bit lower, inflation numbers and a couple other factors.
Yeah, although the inflation numbers weren't quite as bad as everybody thought they'd be. Talk to me about that.
Well, inflation, 4.5%, that's extremely high. But when you sort of break down some of those numbers, then you look at the fact that we've had GST increases, ACC increases, emissions trading scheme. I mean, all these things that farmers are really probably complaining about at the moment, to be honest. And then considering that you've got high fuel prices and food prices too, then these are extremely high. But these were all expected, and they were actually a little bit lower than what the Reserve Bank were expecting.
Let's look at the U.S. now, and of course, dire warnings from Standard & Poor's that the U.S. government may be downgraded from its AAA credit rating. That's not good news.
Yeah, I think a real warning shot across the bow. Wake up, America, wake up.
Yeah, what's it going to take? This is pretty serious.
That's right. I mean, I don't think, talking to some of our currency strategists, our interest rate strategists, then we don't think, our core view is that Standard & Poor's are not going to downgrade America, but they are getting a bit nervous about whether they're going to implement some of these changes. If we take ourselves back 2 years ago, they did the same thing with the UK. When the UK was in some trouble, they changed the outlook on their credit rating. And since the UK started to implement some of the changes, then they've actually lifted it again. So I think that they're probably going to do the same here with the US. They want to see some changes. They want to see them fast, and if they do, it'll come right.
Now, let's talk about the global dairy trade auction overnight. It seems to be holding pretty steady.
I think the latest auction is a really good result. We've seen prices fall at the last 2 or 3 auctions, and really, in my view, there's been some weakness and some risks around prices in the short term. So the fact that prices have stabilised, a very minor increase of 0.1, I think that's positive.
Now, the world seems to be in love with commodity currencies. Is that going to change moving forward?
I don't think so. I mean, when we talk about where things are going, then everyone is liking commodities, agricultural commodities, hard commodities, those sorts of things. When we're seeing, the burgeoning demand out of Asia and that sort of thing, then this is really going to be key, and we're expecting that to continue sort of over the long term. So that will boost commodity currencies.
Now, tell me about Jim Rogers. He was brought down by the Commonwealth Bank to Australia to talk to them. He's a leading bull expert, if you like, in the world. He had some interesting messages.
Well, he is very, very positive about commodity prices in general. Specifically, he's saying some of the interesting things. He's saying, farmers are going to be key. Instead of sending our kids to get MBAs and finance degrees, perhaps like me.
That's right.
They should be going out and farming and learning how to farm, because that's the way of the future. And he had some great points. He was probably a little bit more bullish than I perhaps am right now, but that's just because he's extremely bullish.
He says if you turn your kids into farmers, they're going to be the ones driving the Lamborghinis in the future. What do you make of that?
Well, it'd be great if that's if that's the case. I think we've got some pretty happy farmers if that's going to be the future. But I do agree that the outlook for commodities is looking strong, and the outlook for agriculture is also looking strong. It's just there's going to be a bit of a rough ride getting there over the next few years, and some things need to happen.
All right, James, we're going to talk a little bit more about Jim Rogers when we come back with our next guest. Thanks so much. After the break, Chinese agricultural companies have taken control of New Zealand Rural Services company PGG Wrightson. So what's up with Ngāi Tahu's plans to take a cornerstone shareholding in the Kiwi company through a joint venture with Chinese companies Agria Singapore and multi-billion-dollar company New Hope? The latest consumer price index jumped 4.5% in the year to March, its fastest rate since just before John Key's government came to power in 2008. The government says it shares our pain, but suck it up. Who's to blame? And farmers say the latest Chinese bid for those 16 Crayfar farms will be an acid test for our new look overseas investment office. But first, answer this in our Farmers Facts and Figures quiz. What percentage of all dairy products consumed in China is imported? The answer when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage of all dairy products consumed in China is imported? The answer, 10 to 15%. Now let's look more into the recent advice of Jim Rogers, author of A Bull in China and perhaps one of the world's highest profile commodity bulls. He's just been down under visiting Australia, where he talked about his outlook for global economies, global financial markets, and preferred investment strategies, of course. His message, sell bonds, buy commodities, buy a farm, and buy the Aussie dollar. And oh yeah, he says, also teach your kids how to speak Mandarin. Joining us now is financial journalist Rod Oram. Rod, make sense to you?
No, it doesn't.
Tell me
but
why.
I'll confine myself only to the agricultural commodity part of that. The very big picture is that the Food and Agricultural Organization at the United Nations says that we need to increase food production by 50% over the next 20 years and by 100% over the next 40 years to feed the planet. That sounds good, and you could get really excited about the price pressures there. But if you look at how much land is cultivated now, there's a lot left to cultivate. So of the top 8 agricultural producers in the world, they're cultivating about 800 million hectares, but they've got about another 1,200 million, 1.2 billion hectares to cultivate. And there are places like Brazil, which at the moment is only cultivating 1/9 of the land it could. And I don't mean Amazon rainforest. There are places like the Cerrado, the high dry plain to the southeast, where people are only just beginning to farm. Now they understand the chemistry of the soil.
James, what's your take on it?
Oh, to be honest, I agree with Rod, because I've been doing some presentations lately, and some of the things that I've been talking about is that, yes, we've got big population increases, we've got big wealth increases, food demand's going to lift, and people want to eat more livestock and those sorts of things, but there is still a lot of land around that could potentially be, there are some issues with it. I mean, it's infrastructure, all those sorts of issues, so we can't just rely on the fact that we're going to see this big population expansion in terms of staying ahead of the game.
We're all agreed, I think, that the U.S. will probably continue to underperform in the coming years, correct?
Oh, I think so. I mean, and this Jim Rogers pointed that out, that he's was pretty bearish on the US economy and where they're going, and they've got to sort some issues out. So I think that is going to be a continuation. I mean, coming back to some of the points he made, I am positive about agricultural commodities. It's just we may not see prices stay at where the levels that they're at right now. They're going to be higher than historical averages. Still positive about all those factors, but we could see some responses down the track.
And I'd flow that through to the outlook for New Zealand, because we long ago ceased to be the lowest cost producer of milk. And therefore, if you look at, for example, our very high land prices versus what's available overseas, it's really hard to see how, even at relatively high prices, say $5,000 a tonne for milk powder, there is a big prosperous future here. So, for example, in Missouri, which is hardly a political risk as a land, good dairy land for pastoral farming is only 1/3 the cost in New Zealand. Farmers are paid more for their milk, and they don't have to pay capital into the processor. So that's the opportunity out there for a lot of competition to come from places like that, and then places like Brazil.
And here's the million-dollar question. How do we stay ahead of the game? What's your advice to farmers here now?
Well, I think we've got a great opportunity in the short to medium term to take advantage of where we're at. I guess, I mean, Missouri, those sorts of places have big opportunities, but they've got different systems. If they change their systems to sort of New Zealand grass-fed systems, those sorts of things, Brazil really gets their act together, and they start really developing some of the land into key resources, then they can catch up. But there's probably a couple of years, 3, 4, 5 years, where we can stay ahead of that game, and we can change those processes and lift the game and lift the bar even higher, I guess, in agriculture.
Again, I would say the challenge is much bigger than that, because that view that James just articulated there, with due respect, is about incremental progress of the existing commodity model. Farming, it has a great potential in New Zealand, but only if an awful lot more science is applied to it, and not just the science on farm, but the science of the product themselves. We've got to get beyond thinking value added in milk products is a nicely branded yogurt or dairy dessert. It's not. It's things like lactopharmaceuticals and bioactives. And here's the really scary thing. Late last year, Nestle announced that it was making a $500 million incremental investment, because they already do this stuff, in the science around that, and we don't. So that's the challenge. We're not focused on where the real value and the real future for agriculture is in this country.
I totally agree. That's where we should be lifting the bar. The issue for us over the next few years is that we're going to be capital constrained. We should be taking the opportunity to make the most of the good prices right now, and to be positioning ourselves to take advantage of the points that Rod's making, probably in the next 3 to 4 to 5 years. And that's really where agriculture in New Zealand needs to go, to make sure that we're providing the best value for farmers and for the New Zealand economy in general.
Where is the impetus going to come to make the kinds of changes we need to remain at the top of the game?
It's got to come from people themselves, and I don't look to the government on this.
You've got to be one of the few that doesn't look to the government.
This is the 4th English language or quasi-English language country I've lived and worked in and called home. I hope it's the last one. And of all the countries I've lived in, and that's the UK, the US, Canada, and now New Zealand, here in New Zealand, business is far more dependent on government than any of the others in terms of looking to government for strategy and ideas. These ideas have to come from businesses themselves. It has to be the dairy industry that drives this and then goes to government for some help around that strategy. So that's where it's got to come from. It needs those big leaps in understanding as to what the great opportunities are out in the world and what the challenges are for us, and to lock on to that rather than what we're doing at the moment, which is just focused on incremental progress on the existing model.
Okay, let's take a look now at, going back to China, the bid now to take over Crayford Farms by Shanghai Peng Jin. It looks like it could very well get the go-ahead. What do you think about that?
Again, I'm feeling uncomfortable about this, and I find this difficult to say because I'm a great believer in foreign direct investment, whether it's ours overseas or somebody else's here. But for me, the real test is whether that new investment actually changes anything and actually contributes something to New Zealand. And that's the test that needs to be made. And so it's the test that Ireland applied to its foreign direct investment. And in this case, I'd want to see a very detailed proposal and commitments from any foreign investor as to how their investment in the dairy industry will actually make this a stronger industry rather than simply just displacing domestic capital.
What do you hear about what the plans are for this company if it does indeed get the green light? It's offered, what, $200 million, and the receivers say it's the best offer they've had.
Well, and probably they have started to indicate some of the things that Rod's talking about here. I think the message has come loud and clear that if you want these farms, then you're really going to have to provide some benefits to the New Zealand economy in terms of new products and access into the market. And so the things that I'm reading in the media, at least, are suggesting that they are going to be providing new products and access into the Chinese market. So, like, there's a lot of interest around this. I'm just wondering when there's going to have to be some acceptance that it's going to happen.
Okay, milk price regulation now. Of course, Andrew Ferrier coming out saying it would be collective suicide if the Commerce Commission inquired and perhaps regulated how much we pay when we go to the dairy to pick up our bottle of the white gold. I can't believe that we're still talking about this issue. Rod?
Indeed. I think it's as uncomfortable as it might be, we have to get used to the idea of paying global prices for things. Now, I can make that argument more easily with oil than I can with milk, because whilst oil is very important to the economy, milk's obviously very important to the nutrition, particularly of young people. However, the idea that you could try to regulate that is problematic. Maybe there is some very narrow thing around, getting back into the game of supplying milk to children. Maybe there's some possibility there. But in terms of anything heavy-handed in the market, I think that would be a very big mistake. Farmers have spent, 25 years learning the very difficult disciplines of being exposed to international price. That does make them farm better, and it would be a grave mistake to start pulling back from that. The real issue is, and this is a lot harder to deal with, is about us being able to earn more in terms of our incomes and our salaries. But that is about how the New Zealand economy earns a living out in the world economy, and that has to be beyond commodities if we're going to earn a big enough living for us to be paid well so we could then afford the milk. That's the real issue, and to get horribly heated up about milk prices, I think is again missing the essential point here.
I think he might have a point, James. Now, do we have our blinkers on, worried about these little things on the home front, when really we should be looking through that big window to the world thinking, how are we going to not only survive, but thrive?
Well, I mean, the whole milk issue, to me, reading some of the things and watching different bits and pieces, it seems like the media's got completely caught up in it.
Oh, sure, blame the media.
Well, economists get blamed, so...
Let's get them, Rod. Let's get them now.
No, it's true. This is indefensible.
You think it's a media? You think it's a media beat up too?
It is a really interesting issue, and it would be wonderful to have some real light shed on it. So I'm all for an investigation. Let's get the facts on the table. But to think that there is some magic wave of the hand here, a new piece of regulation that can put this right, that is not there.
I wonder, too, if it isn't another reflection of the kind of nanny state that New Zealanders, I think, have been living with for a long time. Big Brother's going to come along and fix our problems for us. I say bull. We're going to have to do it for ourselves. James.
Yeah, exactly. I mean, how many times have we, probably the last year, it's been a difficult year. We've had a lot of catastrophes in New Zealand, but continually we go back, you hear the story, what's the government going to do for me? How are they going to help me out? I mean, sometimes people have to help themselves out, and we've got to take the bull by the horns and try and find that new, the Nokia of New Zealand, that sort of thing, try and find those things. And we have some great resources and some great products and a good story to tell. It's just whether or not we tell it right.
James, what's the latest with PGG Wrightson? It looks like the Chinese are coming on board.
Yeah, well, they announced last week, or Agria announced last week that they've acquired over 50%, so that meets the threshold of their partial takeover. So it looks like they are coming on board, but there is a few things happening in the background there that are of interest, it seems a little bit strange to me exactly what's going on there. Ngāi
Tahu wants to be a part of it, Rod.
This story disturbs me very greatly because Wrightson, not just in its seeds business, but in its deep intellectual knowledge about farms and the value there and stock and all the rest, are really essential to New Zealand farming. Now, I'm not saying let's not have a foreign investor in there, but I'm saying that we should make sure that that's a minority stake, and that we make sure that we, New Zealand Inc., controls the upside of all this. Agria is a very strange little company that had a very troubled launch on the New York Stock Exchange a few years ago. It was a very dubious cornerstone partner to come into Wrightson's in 2009. And in this takeover, they have said virtually nothing about what they're going to do with the company. And they bring in New Hope Group, which is a Chinese foods group. And there is a lot of concern out there that Agria would just, because Agria really isn't a company.
That's
There's nothing really to it.
Whereas New Hope is a huge conglomerate.
It'll just flick it on to New Hope. Well, we know what happens then because we have great history of this all the way through the 19th and 20th century, when it's the overseas food owners and retailers who control the process. They make the profits, not the farmers. And all the way through this, the board has been quite supine. They've said,
they're basically playing dead.
and
Yeah.
there's been no pushback from New Zealand Inc. about this at all. And now along comes Ngāi Tahu, and they're saying, well, we've got this emerging rural strategy, was their phrase, towards an environmentally sustainable business model, and somehow buying 7.02% of this joint venture is going to help them develop that and their international connections. I'm not at all sure that they know what they're walking into.
Gentlemen, we'll have to watch this space. Coming up after the break, Future Proof, what our experts will be keeping track of over the next 7 days. Buckle up for the ride and hold on. But first, a question for you in our Farmers Facts and Figures quiz. Where else in the world has Chinese conglomerate Shanghai Pengjin, which hopes to buy the Crafer Farms, invested in farming projects? The answer when we come back. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, where else in the world has Chinese conglomerate Shanghai Pengjin invested in farming projects? The answer, Bolivia, Argentina, and Cambodia. And now it's time for Future Proof. What's coming up that our experts will be watching? Let's start with Cavalier Carpets and their interest in Wool Services International. The merger's gotten the go-ahead from the Commerce Commission. James, what can you tell us?
Yeah, well, there's plenty of action going on in agriculture at the moment. That's probably something we've seen the past 12 months globally with a lot of companies coming in. So Cavalier, they've put in a joint venture partnership with a couple of other companies, the ACC and Direct Capital, and they're looking to acquire Wool Services International, which of course, they're looking to sell down the receivers of South Canterbury Finance. We're trying to sell down the shareholding in that. So there's an interesting dynamics going on there, because that would, if Cavalier took it over, then that would create a monopoly for wool scouring in New Zealand, and that the Commerce Commission have initially said that they would be relatively comfortable with that, based on the fact that if Cavalier don't get it, then we could potentially have Chinese coming into the market, and what would that do? We could potentially see some of the value created here in New Zealand moving offshore. So that's a really interesting one, and continues on with the theme that we've seen over the past 12 months, I think.
Absolutely, and I know, Rod, of course, that you're going to be watching PGG Wrightson very closely, and in particular the LIC connection.
Indeed, I find it extraordinary that Livestock Improvement Corporation, holders of the genetic database for our animals, is apparently in negotiations to lend Agria $10 million to finalise this deal. I don't know what they're up to, why they think that's a useful thing to do. And again, I don't want to sound paranoid here or anti-foreign investment. I'm just saying you have to be very intentional. You need to know exactly what you're doing and why you're doing it with whom. And I just think a lot of people are sleepwalking into potentially very grave problems here.
And I see that Turners and Growers has potentially put up its hands and say, we're for sale, who wants us? What's your take on that?
Well, Turners and Growers is a very important organisation in terms of its ability to source a great deal of produce and then be able to market it very well. And again, it would be very easy to see that falling into overseas hands, a large agribusiness perhaps, or perhaps even a food retailer or a distributor of some sort. But again, I think it would be incredibly important for us as a country to hold on to that. That's a very good vehicle to build the New Zealand horticultural brand overseas.
I think it is a smart company, but I wonder how well it has been performing. Critics say it's not doing nearly the business it should. James? Well, I mean, has it got anybody to blame but itself at the end of the day?
I probably wouldn't comment on the last year or two, but if you look over 10 years, then it has been a growth story, and it has, they have improved a whole lot of aspects of horticulture around New Zealand. So it's something that I agree with Rod. Something that I don't think we should see slip out of our hands, because it's going to continue to be key for the economy. It's
kind of like those cluster bombs. They're going off here, there, and everywhere, and meanwhile we're all distracted about how we're going to rebuild Christchurch. A lot of stuff could slip under the eye line.
And it already is.
And it already is. This is wake-up call time for New Zealand, isn't it?
Absolutely.
Yeah, I agree. It already is slipping away.
Thanks, gentlemen. Thanks to my guests, ASB rural economist James Shortall and financial journalist Rod Oram. We love to hear your feedback, so check out the website. By the way, if you're feeling hard done by when you fill up at the pumps, you might just be right. Take a look at what motorists around the world are currently paying for a liter of the regular unleaded stuff. You know what they say, the best attitude is gratitude. Keep the faith. See you next time.